What's going on, guys? It's Kenny Trades 52 with Coin Club Trading, aka the Wall Street Cartel on Discord, and welcome back. We're going into another video. This one is going to be the beginner indicator stack for new stock and options traders. So let's pull up TOS and get into it. So starting here, we have Airbnb, English is not me today. Airbnb stock, right? So pretty much what we're looking at is just a price action chart right here, and we're also looking at some volume. I'm going to throw on the stack real quick and kind of go into why I think it's a good stack and pretty much what you're going to look for. So first of all, we're going to go on TOS, and actually before I do that, I'll just show you. You can do it here in studies. You can do a quick study add study, or edit study, and I'm just going to add and type them in. So first one we're going to add is the RSI. It's the relative strength indicator. Nothing that needs to be really done here. We're also going to add a MACD histogram. I prefer it over the lines, a little bit clearer to see. Lastly, we're going to add a TTM squeeze. And this is pretty much what we're going to be looking at for our beginner stack. RSI, MACD histogram, TTM squeeze. Apply, OK, and here we are. So in that same order, we have volume, RSI, or relative strength index, the MACD histogram, and then our TTM squeeze. And I'm going to go over how this kind of works and how you can actually illustrate or visualize the price action and how these indicators can kind of give you go signals and or stop signals, right? So the RSI stands for relative strength index, as I've said multiple times, and basically how it works, and or in a nutshell how it works to new traders, is you pretty much have two measurements, a 30 and a 70 point or relative point strength index number. And essentially how it works is anytime the stock is trading or this line is trading within it, there's a certain strength number characterized towards it, right? So anything under 30 would be considered in the blue here as oversold, and anything in red or above the 70 line is considered overbought, which means that at oversold points, it's a good, or could be a good time to buy the stock or get into option longs, right? Calls. Or if it's oversold, like here, it could be a good time to take some profit if you're in a trade or riding the stock the way up, or a good time to short in options, right? Or the stock if you're doing that too. So this is a basic indicator, kind of giving you the tops and bottoms mostly for the stock price of, or the price action of the stock. The MACD stands for moving average convergence divergence. So basically how this works is the middle line here, which you're not really seeing, but in the middle here you can imagine there's an imaginary 0 point line, and that is your mean, right? So it is tracking via a histogram the peaks and the valleys of the moving average being converging to the mean and diverging away from the mean, right? Pretty much the way this works is you have a green light and a red light. As you see the MACD kind of go up and start peaking, right, you'll see that price action follows, right? And as you see that green flip to red and kind of dip down, basically it means that the stock is starting to lose and converge right back to the mean before it diverges under and starts going pretty much against the price action that it previously was, right? So from high to low, you can kind of see that if you just draw it out, right? If you're looking exactly at this point right here, we're looking at this kind of break right here, and you can kind of see, if you were just to kind of draw like a quick cross, you could see that the price action of the stock here is going in the same movement as the MACD, right? Positive up to the 0 line and then underneath. Now, the nice thing about this is it kind of tells you and signifies when the price action of the stock will start kind of converging back across into the positive, and or, you know, converging and diverging to the negative, right? So this is a nice indicator to combine with the RSI to see and confirm if the stock truly is at a high point or if it's at a low point, aka sell the top, buy the dip. Sell the top, buy the dip, right? And you can see that there. The TTM squeeze is the trailing 12-month indicator squeeze, and what it does is it's actually a momentum indicator. So in this manner, you might want to see, or you might wonder, hey, if I'm going to enter maybe this dip here, right? How do I know when to, or how long I can ride the momentum of this stock? Well, that's what this is. So these green dots here confirm, or the green dots essentially are confirmed movements. The red dot is the squeeze. That is the uncertainty of the market for the stock to actually go up or down. And then if you're looking at the histogram bars, in this case, the light blue essentially means that the price action is going up. Dark blue is that the price action is starting to slow down. Red, price action is dipping. Yellow, it's slowing down on the dip and it's about to start kind of picking back up to maybe potentially repeat the process like you see here, right? And based off this, you can actually get some pretty interesting movements and or time some pretty interesting dips on the bottom and catch big moves, right? For example, if you're looking here, let's say you saw the stock squeezing, you weren't sure, you started seeing a dip, and you get the transfer of a green dot red bar from the downside and pushing down to yellow, a big change in momentum with a green confirmed dot, signifying that the momentum is now shifting. You probably could have bought the dip here in stock price at 132 or 133 and change, and then rode it for however long this momentum indicator goes to its peak before it shifts over and tells you that the momentum in the bull case has stopped, right? That would have indicated in a result of about 44% in the share price, or in options, that's a pretty big move in the course of 17 days if you timed it correctly, right? Now, in the real life or during trading in smaller time frames, really, if you could actually break this down, you could see it actually works out pretty well, right? And the nice thing about this is you can catch the movement here on a lot of these stocks, right? So you could look at Airbnb, you could look at something like AMD, and you'll see here it works out really nicely, right? So today we could have seen that the stock was squeezing all of yesterday, and depending on how it opened up, how the MACD looked, and how the RSI combined stacked, it could have gave us a little bit more confluence or confirmation that there could have been a potential downturn in this shift in energy to the upside here, right? Or technically what we're looking at here is a confirmed break, and riding this momentum down could have provided a nice result in shares to the downside if you were shorting of about 7.5%, or an option 7.5% being a really profitable move if you played that correctly to the downside. Now, what I would be looking for in the case of tomorrow, if I were to be playing AMD options, I might be saying, well, one of two things. I can see that the momentum is starting to shift back up going into the post-market. Depending on how this opens up in pre-market, let's say we're still around $81, and if this kind of hill here to the downside, or upside down hill, a valley if you will, starts to look like this, then maybe I could play calls to the upside depending on how the price action responds to my levels. And I might be able to see that we're actually pretty oversold in this time frame, and I might be able to take advantage of that indication and play to the upside. The last indicator that I will actually add for new traders here is going to be, or even intermediate traders, is going to be the VWAP, right? The VWAP is a nice little tool here. It stands for volume weighted average price. And just if I can find it here, there we go. What is nice about this is if you actually see the details of this criteria, as you can see at the top of the screen here, it says VWAP minus 2.0, 2.0, and that stands for the standard deviation from the mean. So in this exact pretty much time frame, or if we break this down a little bit into the 5-day, 15-minute, and then zoom across the day, you could actually tell that the mean is going to be this purple line here, right? This is going to be your quote-unquote baseline or zero, and then above that is 2 standard deviations of price action from this price, as well as below that is here. And if you were trading this on smaller time frames, it can become really helpful for a scalper, day trader, however you want to call yourself, because you can actually play these levels and kind of follow the momentum with it, right? Based off this price action and the indicator stacked, we could see that here at around 9:55 to 10 o'clock this morning, AMD looked like it was about to sell off. If we had entered the level and played the break of the 85.3 support to the downside, we could have just rode this all the way until we kind of got close back to VWAP, right? And our stop loss would have been here. And if we never touched, we could have just held this out throughout the day. So back to the overall arching theme, This is the beginner stack that I would recommend if you're just getting into stocks or just getting into options trading and trying to learn. You can start by learning momentum trading and see how profitable you are. Hope that helps, and hope you guys got some context out of this. If you liked the video, let me know. And if you have anything else you'd like to see, let me know down below. Peace.